Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, September 30th, 2024. It's 11:37 a.m. Eastern Time, so I'm starting the video. And what we're going to do in this one is take a look at the semiconductor sector along with some of the top holdings of SOXX. I just posted that today as a trade idea with some near-term price targets, and I'll also cover the potential longer-term price targets if this trade starts to pan out and get some traction, and I'll talk on that here in the video. Before I do, I just wanted a little kind of take a look at the economic calendar. I like to do that recently, more so than usual. A lot of potential market movers. We had Chicago PMI today. That's been persistently on in a decline, beat expectations, but we still had a negative market reaction to it, still below 50, which indicates declining values. ISM tomorrow at 10 a.m. You have JOLTS. That's a big job. We talked about the job market. Focus is very much on that now. Construction spending. Then you have ADP employment report on Wednesday, jobless claims on Thursday, and the employment situation on Friday. So this week we're going to have a lot of insight to the job market. So those are the things to watch. Now let's talk about. Let's dive into the semis. I'm going to get into SOXX. We're going to look at least the top components there. There's only about 30 holdings, I believe, in SOXX. That's the SOXX Semiconductor ETF. That's the official trade proxy. Now, we've had some individual semi-trade ideas recently and currently, or this one was just closed out. As I said, I gave you additional targets. Intel, we bought Intel down here. This was long-term support based on the weekly chart. This is just the daily here, but you go to the left of that, go back, and that's excellent long-term support. And so we just got that one, got our quick 30, 31 or 30% get out. And this is what typically happens upon the initial tag of each price target. We hit a high of 24.66, and that's it. That's the first target hit right there. And so nice sidestep today. Whether it goes higher or not, like I said, I don't, I told you, get 30%, get out. There's certainly the possibility if you think it's going to. I told you my plan was just put profits there before we got there. And that's what I did. But you can, if it pulls back to this level, 22, that's support. You might want to consider a stop below there or a tighter stop. You've probably been stopped out running a tight stop already. And potential additional targets, you get a big old gap right there that may want to be backfilled. And then the downtrend line, they come in together. But again, I don't want to spend much more time on it. To me, it's get 30%, take the money and run. If you want to hold out for another 10, 20, 30, more power to you. All right, the other ones individually, and again, I'll get into this with the top components of, I'll get into NVIDIA when we get into the components of SOXX because it is the big dog in there. So the other one that's not in SOXX, and I saw Mike ask for an update on that, SMCI. That's one that way back here, shorted there, shorted again on this right here on this wedge breakdown. You had this uptrend line right here. Let me draw it out for you. Right there, bearish rising wedge, divergent high. It's not marked as such, but went over at the time you had the negative divergence. Blow off top. See that buying climax? That's a textbook blow off top right there when you see these volume bars like that surge and so forth and so on. So, it's down. This stock's, and remember, this was like, I called it the Robin to the Batman and Robin of AI. This is like the little brother sidekick of NVIDIA. It's kind of how it was back here when people couldn't get enough of it. And it's already dropped 66, well, a total of about 70%. And again, this gives you the nature of what happens when a bubble pops. And more to go. This is all along. Price target one was right here, 355.60. That was from back here. We came close enough, within just a couple percentage points, and on relative to the move, that would effectively be considered a hit. So, and it is still good support. So it's going to have a little tough sledding in here probably, but ultimately still maintain. This is a target zone, so we can, anywhere from the top to bottom is support. You got even better support at the bottom, about 308.50 than you did at the top of the zone. And then T2 down here. And then if things get really fugly for the stock, you have this primary uptrend line right here, which is likely to be hit. So if you want to call that T3, and that depends on how the sector goes going forward. So let's look at that, and that kind of segues us into, what NVIDIA does, because again, that's a big AI stock. And so NVIDIA kind of being the poster child of AI, we'll look at that. So SOXX is the Philex SOXX Semiconductor Sector Index ETF. And I've given you recently, in the past few weeks, a couple months back here, it's actually laid out some new long-term swing targets, T1, T2, both of which were hit. That trend line was hit. I think they were laid out here before this breakdown on this kickback rally. Remember on August 5th, right there at the lows, we covered this in all things short and went all things long, including semis. Semis had a beautiful tag of that uptrend line, that blue uptrend line right there. And we hit it again here more recently. So we hit that. T1 was this 216.34 price target. T2 was this blue uptrend line. And T3, T4, you can see the rest right here. 194.48, 190, 179, 154, 157.50ish, 148.19, and then I have two uptrend lines depending on how you want to draw it. This is really the uptrend off the lows back here from late 2008, your primary uptrend line, and I have a secondary trend. They both come in together, so we're talking either way said and done. That's calling for a drop of about 40, to that first trend line there, about 45% from the recent highs. And of course, that was a big, when you look at it this way from this weekly time frame, you had just a beautiful bearish rising wedge right there. Very solid impulsive breakdown. First leg down, bounced exactly where we should have bounced on the uptrend line. Again, that shows well on the daily chart too. Had a bounce. Here, let's get to the daily. And then I'm going to drill down to the top components and show you how this sector looks and how it's going to look even better. I have quite a few starting to break support, near-term uptrend lines, or price support, or bearish wedge patterns, or again different types of levels. I'm going to cover that. And the way this works is when the majority, those that haven't broken down, if they break down, that's going to increase the odds. So the way I view this is I mentioned, like any trade, you can take a part starter position. I've said repeatedly recently with both SOXX and everything else, SPY, QQQ, the stock futures, small caps, all taking out their primary downtrend lines. You can't get too aggressively short right now, but if and when those breakouts fail, now it's going to be quite a ways down. In other words, this is the minor trend line, the one I showed you on the 60-minute today. These are those last two bounces. There's your primary trend line off the October lows. The one I showed you a minute ago on the weekly chart goes all the way back to 2008. So this is the near-term trend line right here on the daily. It's a very beautiful, very well-defined trend line, a lot of clean reactions. And again, that's the August 5th lows, cover, bounce, go long, reshort there based on the 60-minute charts, NVIDIA, everything else. Again, cover again based on NVIDIA and everything else. Again, I'm going to get to those in a second. And now we've now taken out, we're right on it. So the day is young. I'm going to comment on that in a second when I get to the 60-minute charts about how to maybe trade it. But obviously a break back below this downtrend line and of course below the uptrend line. So now you have that triangle pattern right there, similar to what you have on QQQ and a lot of other things. So it's quite a lot of work. It's quite a bit of work to be done to get there. But if we do it, we're going to be back below the 200 days. We're going to take out the very well-defined, very significant uptrend line, and you're also going to, again, if that happens, fail the breakout. So that's why right now there's just three near-term swing targets going for about a 8-9% pullback based on the 60-minute chart. But let me get to everything else here. So this is it. This is SOXX. We've now dropped down to a 60-minute chart. There's your downtrend line off the highs recently. There's the breakout, which is bullish until unless it fails. That doesn't mean we can't, just look for a short-term swing trade, even if the market and semis are doing this. It's not what I think they're going to do. I'm going to get to that again in this video a little bit more. I think there's a lot of evidence they peaked. But again, this is like any trade. It's either going to work out or not. We're looking at about a 8.5–9% profit of hit. That's T3 is the first of the currently intersecting downtrend line, which I just drew for you there, and 210.90-ish price support, whichever comes in first. The way that works is because trend lines are dynamic, the price level comes in at different points each day. If you fell straight down right now, you'd hit the trend line first. If it took you longer than expected to get there, you're going to hit 210.90-ish first, around 211, right? And, if it plays out in, how it might play out here, where we get there pretty quickly, they'll both come in around together. And then I will, again, this trade could get stopped out tomorrow or next week. I put the stop right here. It was drawn in. That's what I do with those little lines. They're usually drawn in on the screen capture software. I want it just above that previous reaction high there. And with it has a little bit better than a 2-to-1 RR. I think it's about a 4% loss of stopped out versus about an 8.5% profit if that price target's hit. All right, so that's it. We're broken down on the 60-minute chart. And so my thoughts here are, we're on the heels of this breakout. That in itself is bullish, but this is also, we're coming off more bearish longer-term evidence. Again, it's shown here. This is a daily chart of SOXX. We put in a beautiful bearish engulfing candlestick, which is a topping pattern back on July 11th when QQQ and so many other things topped. And unless that's taken out, just like the the market top ranges on QQQ and SPY that I gave you, which we went into and still hold, I'm viewing that as a top. We had a nice breakaway gap right there to really trap in a lot of longs, and so far we're moving lower. Now the key is, not the key, but it helps. A downtrend is defined as a security making lower highs and lower lows. So what we need to do is, again, fail here. We obviously, it wouldn't be help the bearish case if we break that previous high, right? Wouldn't completely eliminate this trade at all. It just shows we're kind of grinding around in a big wide range, a very swing tradable range. Again, there was every reason and then some to be short there, to be covering there on the 5th, to go long. And then sell longs, go short there, breakdown. You had a beautiful uptrend line, breakdown, sell signal. But again, we came in and pretty much hit the trend line again down here. NVIDIA hit trend line support. Broadcom, as I mentioned, hit 200-day moving averages, and everything else in bounce. So that's where we're at. So we've come full circle, guys, is what I'm trying to say. This is swing trading. This is short, long, short, and then potential for a much bigger drop, or we get stopped out and this thing's going up and we just get out of it. I won't flip to long right away, but I'll address this one if it does get stopped out. All right, 60-minute chart. This is where the nitty gritty. We zero in on this. Let me zoom about right here. I think that's how I screenshotted it today. You had a divergent high there. That was the August 5th lows. Cover all shorts, go long. Back here, we had a divergent high, negative divergence following that trend line break, drop down there. That was the other hit of the uptrend line on the daily chart right there. And we also had the bullish falling wedge breakout on NVIDIA, plus NVIDIA hitting its comparable trend line support. Again, I'll get to NVIDIA in a second. NVIDIA bounced as expected, and as did the semis. And we've come full circle. So this is it. This is our uptrend line. We broke it this morning. That's why I got it out to you. We're still below it. As I like to say, the redder the better. So whether it's today, tomorrow, next week, I want to see us move lower. What you don't want to see is a solid move back above the trend line. You could use a tighter stop if the breakout fails. That's up to you, but this is the one I'm using right now. And then, again, if we get anywhere close to this, I will assess everything, including all the semis, the sector, the other two semi ETFs, XSD and SMH. I follow those as well because they have a different basket, a different weighting and different components in there. and then of course the NASDAQ 100 and everything else to decide whether to just, take profits there or hold out for what could be a failed breakout, which again, fall back below that line. All right, we're going to rifle through the components. These will be both, could be both individual trade ideas for you, but more so, like I say, birds of a feather flock together in this sector. The semis tend to move with a high correlation, like the gold mining stocks. Some sectors you don't see that as much, and so it's pretty simple to just use SOXX or one of the leveraged ones if that's your thing. Remember, those leveraged ETFs will really eat you up if you have a sideways choppy trend, a lot of green and red daily closes back and forth, especially for a while. They tend to do better. I know I say this because they have so much scrutiny out there. I've never seen a positive article for them, only negative. But if you're good at predicting how, not only where they're going to go, that's obvious first and foremost. You got to get the call in the direction right. You got to be long SOXL during a bull trend in semis, and long buy SOXS, the bearish one, during downtrends. So where I'm going is in very what I call unidirectional, mostly downward moves or upward moves like that. The leverage ones will actually outperform the non-leveraged peers, meaning you'll do better than 300% what the index did. But if you've been holding any one of those all this time, say since back here, when I draw an arrow to the left, we're back trading right now where we were back in the middle of May. And so SOXX and SOSL, probably SOXS and SOXL both probably have lost money, even though this ETF should be flat, the non-leveraged one. And again, I explained that. If you're new to the site, go to right side of the chart, click on resources up top, go to the FAQ page, and then click on ETF related questions, and then this one right here. Is there a disadvantage of holding an ETF or an ETP for an extended period of time? And I explain, how it usually works against you, but can work in your favor. And it's all about the math, and the math is explained here. All right, moving on. Okay, so there's that sell signal. Since this morning, it's still intact. The markets are virtually flat today. They've been mostly trading red, but again, virtually flat right now on SPY and QQQ. So we're going to go over the top stocks. We're looking mostly the 60-minute charts, but some of these I'm going to loop out to the daily just to kind of paint the bigger picture, because that always goes into my analysis. There are times where you can, make a pretty decent bull case. Like I said, we recently broke out of the downtrend lines on most of the semis and the indexes, and you can make a bear case. Now, to me, as you know, for months now, I've been putting a very high weighting on NVIDIA. I consider it the poster child of all things AI, the market bubble, everything bubble. And I think it has both psychological, I know it has psychological significance to the market. And I also know it has mathematical significance. And what I mean by that, pull over here, you can see the weightings, or the market cap of all the components of SOXX. And you might not be able to make it out in the video. I'll just read. NVIDIA is 3.1 trillion. So it's one of the very elite. Until a year or two ago, when Apple was the first one, you'd never had a $3 trillion company. Now Apple was first. A couple others followed, but it's still a very elite club that only a few have been seesawing, popping into that level, dropping back out. And so NVIDIA being a $3 trillion, $3.1 trillion stock company, it also has that weighting because the NASDAQ 100 is a market cap weighted index, just like the S&P 500. So the higher the market cap, the higher the weighting goes on the index. And that's why you've had this, stark outperformance of, or you had it, I should say, until the NASDAQ peaked before the S&P. And again, so this cuts both ways. When things are good, it's going to bring the markets up, or the index or sector that it's in. And when things are bad, it's going to drag it down. So the semis peaked, as I showed you, way back when the NASDAQ 100 peaked. And then NVIDIA also peaked even before that and remains there. So let's just keep it simple. Downtrend line. This is that most recent shorting zone I gave you. Just kind of recap this trade. Shorted it here. You had a bearish engulfing candle on the daily. This is, again, a 60-minute chart. get back over here. Oh, before I leave the weight. Oh, sorry here. Hit the pause button by mistake. Before I get away from this, NVIDIA, again, being a $3.1 trillion company. The next largest semi behind it, Taiwan Semi, it's still big, but it's only $969 billion, so less than one third. NVIDIA has 3 times the market cap of the next largest. Go down, Broadcom's pretty big at $825 billion. Then you get down to, again, these are just the holdings of SOXX. You have ASML, $335 billion. AMD, $270. So now these companies down here, you get down to the 4th and 5th largest holding. NVIDIA is 10 times their size in market cap, and again, it's going to have that impact. So, so that's why we watch NVIDIA. You can trade it or just use it as kind of a proxy on the semiconductor sector in the market. So it's all right. Let's go back to this and just dig down in these charts, and we'll wrap this video up. So to recap. Bearish on the daily, at least. This is a 60-minute chart we're on now. We had a bearish engulfing candle. You had a bearish rising wedge break. Plenty of reasons to get short. I give you 3 targets on the 60-minute chart. I also gave you longer-term targets on the daily or weekly. It was actually the weekly chart I laid out back on June 26th when I gave you my long-term targets on the NASDAQ 100 and QQQ and SPY. So NVIDIA hit on the day we covered all shorts and reverse low, August 5th. NVIDIA also at the same time at those lows, even though here on the 60 it pierced, and remember that was the opening trade, so it would have, that's where you wouldn't have closed T3 there because it was hit on the morning of on a gap down, which got gobbled back up on August 5th. And so anyways, that's where we closed all shorts there, rode it on up, went to a hard long position on everything, and then more recently highlighted here with the negative divergence, trendline break, objective short, all here, swung it down, but then said covered again, time to cover. You're at trendline support again on the daily chart. The uptrend line was hit perfectly with a bullish falling wedge pattern, and this is swing trading. So bullish falling wedge, positive divergence to go long, and then more recently scale back in short from here to the bottom of that purple box up to the top, but not at above, and give your stops a little bit of room. And so far, so good. So here's what it looks like on the daily. Oh, you can look at it this way. There's a nice clean. You can see the primary uptrend line right there. It's just such a clean chart. Nice clean trend lines. There's your 1, 2 hits. This should be pulled just ever so slightly to fit it like that. And we had these last 2 bounces off there. And so this is it. This stock is bouncing between this triangle pattern. A solid breakout, as long as it doesn't fail. It cannot be spun as anything but bullish, especially if they start taking, NVIDIA takes out these 2 previous highs. So that is where a stop should be on NVIDIA. And you're kind of all in moment if you want to add to it, if you're just taking, because right now, remember, we're still on the heels of the breakouts on SPY, QQQ, SOXX. So it's not in my opinion, for a swing or trend trade, it's not a hard short moment. You can start scaling in. There's not enough evidence to be aggressively short until we start getting some of those breakouts failing and support levels going and things like NVIDIA. This would be just kind of a death blow for NVIDIA, break of the triangle there. And again, I've given you on the, here, it's on the weekly chart right here. These are the targets laid out back on, when I give you the long-term targets on SPY and QQQ. So we have currently T4 is the final target of $40. And that's going to be from high to low. It means NVIDIA would have wiped out 70% of its profits. I mean, I'm sorry, 70% of its market cap. And I know that's heresy among most out there, and especially NVIDIA bulls. But it's par for the course for the stock. It's done it before, 90%, 86, 56, 69, and so forth and so on. But as I like to say, support is support until less broken. So I've spent a lot of time harping on this uptrend line, very important uptrend line. Can't write it off. They rally it up here. We go to new highs. If we do, I'll look at it that time. If it happens in the coming months, anytime, between now and let's say early next year or the end of the year, these are weekly candles, it will be a divergent high, and we'll revisit it up here. We'll have been stopped out of it. I will have personally, I hope anybody else would. If it goes to new highs, it's going to be about a, at least a 15% rally. But again, it's easy. These are quantifiable levels right here to, stop should be probably not much farther, not much above those previous highs there. Because if you do that, you're going to take out the downtrend line and everything. I'll take that downtrend line. I'm going to tweak it to come in nice and clean. See on that previous high there, that recent high there, and of course the all-time high. And that all-time high again coincided with that bearish engulfing candlestick right there before the semis. This is where the semis and the NASDAQ peaked back there. You did have a bearish engulfing, but a bearish engulfing as a topping stick can only come at a top. So that's the one that counts right there. And that's the one that when that one's taken out, then it's going to undo that as a potential topping stick. Although again, the stock already fell from high to low about 35%. Okay, we need to get away from NVIDIA. There it is. And then recently broke below that uptrend line right there. You've got some minor support levels. But let's look at the rest of the lot. Because again, for this or any trade on SOXX to pan out, what you need to see, what you have to see is collectively the majority need to break down. It's not as important as NVIDIA is. It's, not the entire semiconductor sector. And if you have 90% of the stocks, bullish price action, bullish breakouts, then ultimately, even if this stock continues to suck wind for a while, but it'll probably play catch up if you see the rest of the sector go up. So let's look at the rest of the sector and I'll wrap the video up. So we're going to start out with 60-minute charts. I'll loop over on a few of these top components to the daily just to kind of show you the bigger picture again. But so this is what I have. I have trend lines. You can see here Taiwan Semi, the second largest, a wash, rinse, repeat situation. We had a divergent high there with a minor trend line, right? Negative divergence. Gap down, took out both the minor and the secondary trend line. And you had a drop from high to low. It was a drop of about 31%. So this is a very volatile sector, very profitable sector to trade long and short. Just like gold and GDX, we've been doing that for months now. Gold's been incrementally kind of going higher, but not in a relatively slow grind up. But then just where the trading opportunities have been, just either way, long or short, long or short, long or short, based on the 60-minute charts. And we keep, knocking them down there, batting damn near 1,000 on that. And we'll continue to do it. And then if you're a long-term investor, yeah, the bullish case is certainly there for both fundamentally and technically in gold and silver and all that. But as of now, we're short. In the semis, same thing. Semis can go to the moon and beyond. But if this trend line breaks here on Taiwan Semi, the second largest, there's your primary uptrend line on the 60-minute chart. It follows a divergent high just like it did here. And that's what I want to see. That would certainly help. And again, as I go through these, and if you replicate these trend lines and set price alerts, when you see the majority, especially the top components breaking down, that might give you a little more confidence to add to that position. Otherwise, if they don't, you may want to hold off, or maybe you're holding off to get a daily close. I already mentioned that in the post today. We haven't closed the day below that trend line on SOXX yet. But here's Taiwan Semi. There's the big one there. And just to loop over to the daily chart, that's what it looked like. We had a big, there was a bearish engulfing at the highs as well, followed by a beautiful bearish rising wedge on the daily chart. A big negative divergence right there. Drop right down to the 200-day moving averages and that 134.88 key support. And we bounced, right? And that's it. And so there's the same trend line. If you want to do it on a daily chart, this is the one I just showed you on the 60-minute chart. So that one hasn't broke yet. You would see if you can get a red close, a red candle on a solid daily closing, all the better. AVGO Broadcom. So Broadcom, as covered recently, heading into earnings, we're up here. Or somewhere here. I figured a post-earnings drop, which we got, but then highlighted just like you hit here. 200-day moving average. They hit it. They stepped in and bought the 200. It's key support. And so again, Broadcom has to take out the 200s. You also have a nice uptrend line, and it's not unusual for some of these volatile semis to briefly. That was just an inch or one-day pierce, but again, you hit the 200s and you exploded off them. You hit the 200 again, so the 200s are really the BOD or benefit of the doubt level. Plus, this is a pretty good level too. But again, the 200s are key in the uptrend line, everything there. So what I'm looking for, first things first, would be a failure of this breakout. Remember, you have a symmetrical triangle pattern. If you take the bottom of that long-term uptrend line there, this is a breakout right there. And any back test, if you're bullish, you want to buy a back test with a stop somewhat below, especially below those other the trend lines, the uptrend line and the 200 days. You could keep a tight stop there. If you're bearish, you want to see this breakout fail. Drop down to the 60-minute chart. Again, you already have a breakdown of the bearish rising wedge following a divergent high, and there's that downtrend line. So this is a level to watch. Failure of that level. I think I have an alert. No, I don't have an alert on this one. I'm going to set it to see if that breakdown fails, if we move down through that trend line. But again, it's wash, rinse, repeat stuff. That's why I share the idea. Divergent high, divergent low, divergent high. That was actually a divergent low right here. I didn't have it marked. But you had a little, it wasn't big, but it was a divergent low. Duplicate that, borrow that, bring it over. And that's it. This is swing trading. Wash, rinse, repeat. Divergent low, divergent high, divergent low, divergent high, divergent high. All right. ASML. Okay, this one, here's your uptrend line, 60-minute chart right here. We're right on it right now. We need to see that trend line break. So bigger picture, you recently broke out. You had a big divergent low, bullish, positive divergence there, right? Then we went on, we broke out, we gapped up, broke out above the downtrend line. So first things first, see this uptrend line right here break. Then you have a back test, and where the bulls, quote unquote, doing my little air quotes with my fingers, should be buying it if it does get there. But if they don't and it fails, that's very bearish. As I often say, fewer things in trading are more bearish than a failed breakout. Just like a failed downside bearish breakout is also very bullish. Hasn't happened yet. Something to watch for. Something to maybe consider with your positioning if that does or doesn't happen. AMD. Again, this is why I'm doing this video. It's too many charts to cover. When I got what I got out to you today took long enough to mark up. There's the uptrend line. We're right on it right now. Watch, rinse, repeat. Divergent high, drop. That was actually a divergent low right there. Rally. Divergent high, drop. Divergent low, rally. You get the point, right? This right here, there's your current divergence lines right there. Negative divergence. There's your uptrend line. That was a divergent low also right there before this rally. Need to break that. And then 153.59 is your first target / support. Second level right there, about 143.20. And then what you really want to see on all these guys is starting to take out the previous lows. And then it should we should start snowballing if we get anywhere near the, as I've been repeatedly saying, if we happen to get anywhere near the August lows, we'll probably just waterfall down through them. And the trick will probably be when we take out the early September lows, both in a lot of these semis as well as the major indexes. But that hasn't happened yet, so that's why I'm doing this video. These are levels to watch. Qualcomm, right on support on the 60-minute chart. There's your primary downtrend line, which was just broken. So you can see, again, like I said, so many of these charts mirror each other, are very similar. Daily chart, Qualcomm had a beautiful divergent high, negative divergence, and an island top. That's when you have a single candle with gaps on both sides, marks a topping pattern, a reversal pattern, and it so far dropped about 35%. The million-dollar question, is it over? I can tell you from a daily chart, big resistance right here. And I'm going to put an alert there if I don't already have one. If it pops that level, again, anything more than just a failed breakout, it's going to be bullish. So this is what you want to see Qualcomm stay below. And as I just showed you on the 60-minute chart, you have this little minor trend line. You want that to break. As I like to say, resistance is resistance. And we're not too far below it. So that also makes for an objective short right now, but not an all-in moment. The last one, AMD, I want to just show you, I showed you the 60-minute chart AMD and how we're above that trend line, but look at that evidence of a top back here in early March. You had a divergent high, i.e. negative divergence on the indicators. You had a bearish engulfing candle, that red candle, the body of that engulfed those previous two. That is a topping stick, shows a trend reversal. And an island cluster top. You had those three candles right there in that purple box were separated by gaps on both sides. So just a mountain of evidence, again, that a lot of these semis peaked. Now, the million-dollar question is, they peaked. There was a 35% drop. I mean, I'm sorry, 45. What am I saying? It is a 46% drop in AMD. And that is, I think, by most metrics, you consider a bear market. To me, it's just a corrective wave in an ongoing uptrend. But, whatever. Take it, for what it's worth. Short cover on August 5th. Like, you should have covered everything because so many things that support. The million-dollar question when you turn off all the lines is the downtrend. This was marked a trend reversal. That is high evidence of a end of a bull trend, start of a new downtrend. And by every metric in technical analysis, we're in a downtrend. A downtrend is simply defined as any security making lower highs and lower lows. So now, if we reverse shy of that previous reaction low, whether it's today, tomorrow, or next week, and then we go on to take out that previous low, then this is where that'll be, and again, it meshes with what I think the market will be doing if we undercut the recent lows from September. And in many of these semis, it'll be what I make a lot of terms up, but one of them I call point of recognition, or POR. And that's where the masses, i.e. the dip buyers that have been buying the dips, realize something else is going on. And they start to see that the stock's failing to make new highs. And it'll be, blatantly obvious to everyone, again, if we take out the August lows, because they were so key. It wasn't just the hard reversal there. It was, again, so many stocks in sectors and indexes hitting my price targets, hitting the 200-day moving averages, which we were calling them down to. And so it's a critically important support level and will be watched by just about everyone. So again, I'm talking 5 steps ahead. Right now in this video, that's why I'm doing these. Short term, we need first things first, guys. And we need to see these semis that I'm going through in the top holdings of SOXX, those that haven't broken down like this one need to break down, and then that will increase the odds, and that to me would be a time to maybe increase positioning a little bit, and then all in after the breakouts fail, the recent downtrend line breakouts on both the indexes and the semis. Qualcomm, QCOM, excuse me. There's your uptrend line. Needs a break right there, minor uptrend line. That's what it looks like on the daily right here. Yeah, I already covered that one. Divergent high on island top. Texas Instruments, big divergent high on the daily. Go down to the 60. That's the point of this video, is really to cover these 60s. This one's broken down. It's not very impulsive. We could still see a stick save. That's when, by the end of the day, if the candle prints back on or above the trend line, then you just have that skinny part, aka a shadow or a wick when it's down below. And so if we can print a solid red close, as I like to say, the redder the better, or tomorrow or next week, it doesn't matter. That's the thing. You already have, what is a suggested stop for this trade on SOXX. But if we do this, and then break down, or even that, go to the top of the wedge, it doesn't change the technical posture. What changes the technical posture? If we go up enough and you no longer have negative divergences and this trend line holds and you take out the previous highs, those are things that change the technical posture. Or a breakdown below the wedge, because a bearish rising wedge pattern, when you're in it, is simply a trade setup. That's a potential trade that is lacking an entry or a sell signal. And so the technical posture would change if we get a solid sell signal on this one, as well as the majority that I've just covered that haven't broken down. All right, AMAT, right on trend line support. I'm going to tweak it ever so slightly because I can see I was a little sloppy on my draw. Now it comes in perfectly. Look at all these reactions. Perfect, clean reactions. Right on support. A little gap there as well. So if they break down, the gap would be your BOD, or benefit of the doubt support, and so we need to see that one break. Micron, and I didn't mark. I stopped marking them up after AMAT. Remember, you can see here 30 holdings right here in SOXX. It's not all inclusive. That's why I covered Intel and SMCI in the beginning, because they're not in this one. But collectively, you can see there. So Micron, Micron had a big hold on the 60-minute chart, divergent high, bearish rising wedge pattern, sell signal there on a breakdown. Recently put in, you can see here, equal lows in price with higher lows on the indicator. That's positive divergence. So just as this was negative divergence, which is bearish, that's positive divergence. Then you broke out of the downtrend line, bullish. You rallied up here, and so you have this potential W bottoming pattern here. If it breaks out, that's going to be bullish, as long as the breakout sticks and gets built upon. Otherwise, resistance is resistance unless broken. Let's see if there's anything on the daily. The primary uptrend line. Remember, Micron just tested that trend line, put in a big divergent low on the daily right there. I covered that one actually the day before they reported, or the day of before the report. ADI, there's your uptrend line, divergent high. See, I don't have all the annotations, but you can see my lines on there. Divergent high, duplicated divergent high, duplicated divergent high. You go there, and it was even bigger divergence like this if you draw it all the way across from here to here. And so there it is. And this is a stock kind of going sideways for a while here, not really going up or down, but all right, we're just swinging off the 60-minute charts. So now with an eye on the longer-term daily and weekly. So Lam Research, LRCX, there's your uptrend line on the 60-minute chart. There was the last uptrend line break. If you shorted that one and covered on the August 5th lows like you should have, you made 34% on your money. And it was full circle with, you got it, positive divergence at the low. That's why everything rallied. All right. KLAC, let me go to the daily on some of these because I haven't marked the 60s on a lot of these lately, but you can see a little minor trend line right there. Divergent high, which I'm still, like I said, treating as the high, and a bearish engulfing candle as well. See that big red candle? It engulfed 1, 2, 3, 4. The 4 bodies of the 4 previous candles wiped out one day. It's a very bearish technical event. And as such, it fell down into the August 5th lows like everything else for about a 28% drop, hit its 200 days and bounced off them, tested the 200 days again. So, all right, you get the point. So I keep covering these 60-minute uptrend lines, 60-minute charts, but on the daily, you know, if I, for whatever reason, didn't follow up on these stocks or the market started just really rolling over hard, you know what to look for, you know, to keep an eye, especially those that behave well off their 200s. That's when I say that. Some stocks, if I look at the chart, and I don't see a lot of reactions off the 200, but majority, a lot of tech stocks, semis, big tech, the FANGs, QQQ, it just, the 200-day during a bull trend acts as support, and that's what you want to buy. And then when the 200s are taken out, then you're in a bear trend, and you want to short rallies back to them. So there's KLAC for you. And that's a big chip equipment maker, and like just like almost all semis, well off its previous highs. So again, it's glass half full or empty. Some see the makings of a new downtrend. I can't say that with the highest confidence again until the recent lows are taken out, but my confidence goes to, man, about as close to 100% as you can when those recent lows get taken out on just about all these semis and the market, because then you're going to be below the, not just that key reaction low, but you're going to be below the 200 days, and the case to be short for a longer term, multi-month swing trade really increases then. So until then, a little caution's warranted, and that's that. Intel I already covered. We hit our price target, got out, sidestepped the give back so far. Marvel, back testing that yellow. Here's one that broke out above its downtrend line like a lot of semis did recently. And it's currently back testing. So it needs to fail that back test and then needs to fall back below 65. Let's see if there's anything on the 60. Nope. Chart looks like an EKG on the 60. All right, that's it. There's one that had a bullish falling wedge, NXPI, breakout recently, back test, positive divergence. So again, can't get too crazy bearish short, but if these start to fail, yeah, in my opinion, you can then. So that one's testing right now. I gave you a minor uptrend line right there. You can probably see it on the 60 as well. These are the things I'm looking for. And the more of these set price alerts, whether it's today, tomorrow. I already had several go off. Remember, that's why, including SOXX. But when the rest of these go off, whether it's today, tomorrow, next week, 3 weeks from now, if the chart's still, if I can still make a case to short, then that's when I'll increase the positioning and on shorts on the semis. And that'll also weigh over to the NASDAQ 100 as well. Keep that in mind. A lot of these are big components in the NASDAQ 100. All right, I'm going to pause the video and rifle through them and see if any others stand out. Again, it's so easy to just use an ETF when trading the semis because of the fact that they move in concert for the most part, high correlation. But if any of you own individual or want to own them long or short, you want an opinion on any of them, any individual ones, let me know in the comment section below this post. I'll be glad to share a chart. Right now I'm going to pause the video and just look at the remaining 15 because I've just covered the top half of the sector. Again, by market cap, so the ones that are going to have the largest impact. But let me rifle through the rest and see if anything stands out. You know what? I can do this fast. I'll do it while I click through them. I'll just eyeball it and just tell you. MWPR, there's your primary uptrend line, a little minor trend line. So we need to break that minor trend line. That should bring us down to the primary trend line. Then we need to break that. First target would be 781. Then when that goes in the 200 days, it should open the door to a much bigger drop. Other than that, if it goes up a little more anytime soon, it will be guaranteed to simply extend. This was a divergent high right here. And as you can see, any equal or marginal new high will still be a divergent high. If we go a lot higher, then the divergence gets taken out. And I doubt that's going to happen based on my long-term analysis, everything else there. MCHP, breakout of the downtrend line, near back test now. On semi, big symmetrical triangle pattern. These things typically go whichever way. If you break to the upside, that's bullish. If you break to the downside, that's bearish. You can see I have price support just below and price resistance just above. I'm just moving the lines a little bit so you're banded by those BOD levels. So anyway, what that means is you break out, then you have about 78.50 or so price resistance. Then that's even more bullish if you break out. Otherwise, you get rejected, maybe you back test or you fail. All I can tell you is these are the levels, and then look at it if and as each level. The triangle is going to break out sooner than later because you're approaching the apex of it, or you will soon. So, so simply put, this is longer term bullish. This is longer term bearish, right? STM. Nothing but bullish, right? Big bullish falling wedge, high volume on the bottom there. Breakout. If you're bullish right now, as I'm going over these, I'm showing you a lot of them that are broken out. You can take the other side of this trade and go long, and then just use the levels that I'm looking to see break down to add to a short. You can use those as stop loss levels, or you can use pullbacks to those support levels to add on to a position. But again, it's perspective really. Is this a new bull market? A new bear market? Here, we'll look at a very long-term chart. This is going back my weekly chart. So we had a bull market that started in 09 and then really started rallying in 2016. So you have this uptrend line off the 2016 lows, massive big divergent high, i.e. negative divergence. And this thing just recently broke down and backtested. It looks like the start of a new bear market to me. And that's big support there, 28.37. That's going to take this stock down a lot. So again, but it's support. So if you're bullish, you buy it here at about 28.50 and you go long and you maybe target a backfill of the gap right there, right? Or higher. There's a downtrend line. It looks a lot like the Intel chart that I showed you with the same gap and downtrend line above. UMC. At resistance, big resistance. This is a ascending triangle pattern right here. You have price resistance right around $9 there, and then primary uptrend line below. Pop above there is going to be bullish unless it fails, whereas a breakdown to the downside is going to be bearish. TER at resistance, coming off that divergent high. You had a divergent high, you had the initial leg down. This is how things often play out. You get a kickback rally, then the next leg down. Nothing goes straight up or straight down forever. Divergent high, first leg down, rally back to resistance, and that was actually a gap right there that failed it on that gap. And so, this is how I think they're going to go. But if they go this way, then maybe that's just it. This was just a correction, just like this was a correction. And then you pretty much bottomed there, and then you went up to new highs. All right, you get the point. ENTG breakdown. This one's pretty bearish. breakdown, back test is back testing the primary uptrend line off the lows, and you've got a little minor trend line or a little wedge there. It should be lights out if and when this stock breaks down below that wedge. And let me go back to it. And you can see a whole bunch of resistance above, not only the downtrend or uptrend line, but you have the 200-day moving averages, the simple and exponential right there above as well. Skyworks Solution, uptrend line right there. Downtrend line, we had a false breakout so far, failed breakout there of the downtrend line. And bearish, bullish, even more bullish if it can take out those previous highs. All right, I'm just rifling through. None of these really stand out. These are the bottom tier. Lattice, breakout of the bullish falling wedge, and pretty much hit that. There's a resistance point now. We have a couple reactions. I'm going to add a line there. Reaction low, reaction high. So if it can pop 55.80, it'll probably run up, test the 200-day moving averages or the next price resistance. Otherwise, maybe this is the end of the run, and that's typically what you get in a bear market. A bear market is assuming this stock peaked right here with that divergent high. It was actually the divergence just continued. You made about equal, slightly higher highs. The divergence got even bigger. And so far, this thing has fallen from high to low about 60%. So, I'm seeing a lot of semis, and, you can call them bear markets. Again, corrective waves and a longer term uptrend. But, this could be the start of a much bigger downtrend. And you can say what you want about it. Right now, we are in an intermediate term downtrend. Higher highs and lower lows. From that perspective, intermediate. Longer term, it's in a bull trend. And we'll go back here, even longer than that. Weekly, this is what it looks like on the weekly chart. Big old divergent high, breakdown there. At support right now, big long-term support. I'm going to move that line down just ever so slightly to come in for the 2000 to 2001 highs. It's testing those now. If it breaks them, like I think it will, ultimately, we're coming back to test the secular bull market uptrend line. And that's going to mean this stock, which has already fallen about 60%, if it hits that target sometime next year, which I think it will, or the year after, that's going to be about a total 80% drop off the highs. That's the purple primary uptrend line. All right, I'm going to wrap it here. There's just, there's three more. Say I'll wrap it and then I don't, but there it is. Rambus, breakout of the bullish falling wedge, but back testing the primary uptrend line. So this one's kind of caught between a rock and a hard place, support and resistance right there. ACLS, bullish falling wedge, breakout. So see, a lot of these guys have broken out on these daily divergent lows and bullish falling wedges. And the question is it going to be this again? And even that, by the way, was so far just a bear market rally. It was a bullish falling wedge. It was tradable. And that's the thing. Don't get married to these guys. Don't get married to where the semis have to go. I mean, the site's about swing trading. If you're an investor, where you've gone in this stock. If you've been bullish on the semis or this stock since the beginning of two years ago, you're trading now where you were 2 years ago. You went up a little, you were very happy, then you went down a lot, and then you're up a lot. Again, this is what swing trading is all about. Look for these divergent highs, get ready to short, and then when you start seeing divergent lows, get ready to cover those shorts or go long, and wash, rinse, repeat. Divergent high right here. I don't even have this fully marked up. You can see how beautiful these things trade to the technicals. Divergent high, drop. Not a divergent low, close to it. Divergent high, drop. Divergent high, drop. Big bullish falling wedge. Big rally right there. Bullish falling wedge. Maybe we get another rally. If we do, I'll revisit these. If these trades get stopped out and I start seeing things run up to resistance levels like that, because that's a great price target if you're bullish on this one, and these breakouts hold. But remember, guys, birds of a feather. You want to see, if you're bullish on these, you want to see SOXX, that breakout I showed you today, fail. And all the better if the divergences can get burned through. That'd be about 38% rally. But I'm kind of leaning towards that whole, hey, these guys are, bear market that started back here scenario. And this is just bull fodder right there. And bull bait for bull trap. And the last one is Wolf. Wolf Semi. Break out of the downtrend line, just RSI divergence. But something's wrong with this stock. Look at a lot of these semis. What's going on? I don't know if this is a U.S.-based company. I believe it is. You've got the CHIPS Act. And so much stimulus. I don't think we've ever seen more stimulus thrown at the sector, more support, especially for the U.S.-based semis. And why are these guys still well off their highs? Why are they sucking wind like NVIDIA? There's only so much they can do. The federal, the government manipulation. If there's a cyclical change or a secular change in the industry, in other words, that whole AI hype was overblown, which I believe it is. These stocks are priced for perfection. So anywho, there it is. I'm going to cap the video here, just under an hour, but I went through every single component of SOXX as well as a couple that weren't in there, Intel and SMCI. And so I think that brings you up to date. If there's any I missed and you want them chart, just put give me a drop a line in the comment section below this post. This has been Randy Finney with Right Side of the Chart. Have a great day.